Alright, back at it with um another video on I'm just gonna be part of the series, the Changing My Life series. Um Today I'm just gonna go over my trade from today and yeah. So start off with the Discord. This morning at 9 minutes after market opens. Let me bring you that I can go full screen on this. So around here, that's when I sent the screenshot. Said I think obviously said Powell speaking at 10 a.m. So today was Wednesday. There's Powell speaking at 10 a.m. New York time. So wanted to wait. And said we'll be closely monitoring the 10:20 to 10:30 macro, because that's when there's macro that usually runs on price. It'll start spooling, especially on days where there is manipulation, such as Powell speaking. If we scroll back to yesterday's, I'm just gonna show you guys real quick. Powell was also speaking yesterday at 10. So at 10, Powell starts speaking, right? And then go to that macro time. What do you see? Look at this chop, 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 chop. And then comes 10:20, 10:20 to 10:30. Boom, run on sell side. This low and this low. There's your run on sell side during the macro time, and no entry on the 1 minute. But I'm just gonna show you guys real quick. I hope you guys don't mind me showing you these hidden gems within price. But 30-second right there. There's your entry for value gap. It's a nice little run. What's that? 4 minutes. 4-minute run for 40 handles. Not bad. Anyways, back to today's trading. So first things first, wanted to see. I was watching. I'm gonna show the screenshot. It's a lot easier to explain. So boom, we have previous day's high. We left a buy side after coming down, after dropping during the New York Open. We leave the previous day's high intact. So, and then we start just placing up. And then what I was watching was we have this swing high here. We come down, get above this candle, this last down close candle right here. We right here, right there. When we wick above it, when we get above that candle, that is a change in state of delivery, and this candle now becomes an order block. So once this candle closes, reopens right here, comes down into the order block, rejects that, that's when I was like, okay, I think we're now in a buy program. So now we're gonna look for buy side. Where's buy side? Right there in the previous day's high, which was, okay, what happened to my chart? Right there. That's the previous day's high. So yeah, that's why I took that long, because we have this change in state of delivery right here, and then we displace higher again, creating a value gap, and then there's your entry, exit right there, and it's relatively close to a macro timing, the 9:50 to 10:10 macro. It's relatively close. It takes it at 9:49, so a minute before the macro. So yeah. I just spaced out. So yeah, that's what I was just sending. Nice scalp. Took a trade on my account here. So I caught that trade. Nice trade. And then I said sell side resting right above opening range gap midpoint has my interest, but Powell happened right now, so 10:20 to 10:30. So keep your attention on that time window, 10:20 to 10:30. But yeah, I wanted to see that sell side resting above the opening range gap midpoint, because price did not reach down to the opening range. Let me show you. Oops, not. on that chart on this one. Price did not come down to hit that. Okay, bro. What is? Oh, I'm stupid. So if we grab our fib, take the close of that, and mark it open. So there was your opening range gap, consequent encroachment, right? Or the midpoint of the opening range gap. And as you can see, at 9:30 it failed to get to that level. So I was thinking like, okay, when price, this is free notes, guys. I'm gonna be teaching this when I do mentorships. And if you're watching this right now and getting this for free, bro, I mean, ICT has said it before, but I'm just like, this is what I learned from him. So like, you don't have to go learn it for yourself. I'm just like spreading the word basically. But when there's an opening range gap, there's a high probability that price will return to at least a 50% level. So if we, especially after you take buy side and we are at all-time highs, and there's relatively equal lows, as you can see on the right side of the chart. On the right side chart, this low, that low, sell side. So that's this level right here, and the opening range gap midpoint is right below that. So that is a very high probability draw. Yeah, I just wanted to show you guys that. So I hope you guys wrote that down. I'll say it again. When there's an opening range gap, there's a good chance that price will return to at least the 50% level, if not fill it all the way. But as you can see today, we didn't fill it all the way. We just 50%, a little bit, dug a little bit deeper, and then started pushing back up. But back to this. So yeah, go back to what I was saying. So yeah, that's what I wanted to see. This guy thought I was talking about him. I already showed you guys yesterday, and then boom, here we go. We get that displacement to the downside. Here we go. There's your 2022 model during the macro, right there. Boom, on the chart, right there. See that light bulb? 2022 model right here. 2022 mentorship right here. High, low, high, high, lower, low. Boom. 2022 model entry right there. And you guys are probably saying like, oh, what about this fair value gap up here? Why didn't it come all the way up here? It could have, but it is very unlikely for that to happen. Why is it very unlikely for that to happen? I'll show you why right now. 1, we have this fair value gap, right? 2, we have this breaker, right? This is your breaker right here. 3, what is that? It's your inversion fair value gap. So what does it do? We have one large up close candle right here and one large down close candle right there, and then after that we go back up into it and come back down. So that this whole price area is efficiently delivered. There's no reason for price to come back above it, right? So I was very confident that price will leave this gap open, which is why I was able to put my stop right here above that, above the fair value gap candles wick, and then oops, TP down here. So nice 1 to 5R. So that was the trade I took for that. And then so yeah, there's just your 2022 model. As you can see, this is a very slow price run. It took from 10:20 to 11:40 minutes for this to play out, when realistically a 50 handle run on a good day for NAS can easily happen within under 10 minutes. But the conditions surrounding today, Powell speaking, CPIs tomorrow, I think that's it. Other than the fact that we're at all-time highs. Yeah, mainly just those two things. That's why this, like, it took so long for, you know, it comes down, like, and then it retraced all the way back into the fair value gap, and then hit it again, then dropped, filled this fair value gap, dropped, filled this fair value gap. Like, it's filling every single inefficiency. What does it do right here? Takes buy side, and then drops, right? Like this is just a high resistance liquidity run. As you can see, it keeps dropping and heavily retracing. Low resistance, I guess like yesterday's not really like a perfect example, but it's better than that. Like if you look at this price run right here, right? We traveled 40 handles in 3 minutes, and then over here today, it took us 40 minutes to travel 50 handles. So you see the difference. These are just conditions you can expect, especially for the day before CPI. And yeah, there's your 2022 model. I kind of covered a lot of topics right here, but simplest explanation is just the 2022 model. You know, high, low, higher, high, lower, low, fair value gap with your breaker, your entry. There's just certain instances like this one where everything I just covered, how the breaker, the fair value gap, and the balanced price range, all those three factors play into why this fair value gap wasn't tapped into. But I mean, if you just miss this one move, there will be plenty more moves in the future. And like, even if you missed this entry, you could have had this one, or you could have had this one. But yeah, also the 5 minute too. Oops, did not mean to do that. 5 minute too also offered entries, right? There's your institutional order flow entry drill, where it barely taps into it. And then there's another fair value gap right here that you could have entered on if you use the 5 minute. But yeah, that was a pretty nice run. Or it wasn't like clean, but it was efficient. It played out. So I mean, this stuff plays out every day, but some days it'll be cleaner than others, and today it just wasn't that clean, but it still played out. So that's all that matters. I think that's all I sent. Told you where and when the market. So I told you what I was looking for, right? Sell side resting above opening range gap has my interest, and I told you when it was likely to happen, 10, 20, 20, 30. Let's go back to that time. So these two dotted lines is that. Actually, I'll just do this. Maybe this will make it more clear. So there's your macro timing, right? Obviously it didn't. The market structure shift happened before the macro, but it's still relatively close to that time, and your entry was provided during the macro. So that's the main thing, you know. When your entry is provided during a macro, that's always good. Today is just not really like a good. It's not like a clean, clear, precise example of macros being at work. I mean, another thing, you know, when did the liquidity get taken? You guessed it, right? During that 10:50 to 11:10 macro. Like, macros are just times of the day where price will likely have a run on liquidity and start moving heavily in one direction. So you see all this price right here compared to this price right here, right? Like, this is a lot more movement compared to all this choppiness. So in between these macros is when you probably, as the trader who's unaware of time, is when you probably get chopped up and stuff like that. So just take note of that. Like, go back in your notes, go back in your journal trades, and see like, when are the trades that you got chopped up? When were your entries placed versus the trades that just ran very smoothly, very cleanly? What time of the day were those trades taken? Just something to pay attention to. But that's pretty much it for today's price action. That's all I did after the AM session. I just closed my charts and went along with my day because I had my profits. But how long have I been recording for? 15 minutes already. All right. this is where I stand right now. These are the balances. So you have that, then that. Right, these are I have 5 accounts, 5 different accounts. So that's the one I just showed. This is another one. This is another one. This is another one. So that's where I'm at right now. I need 2 more winning days, and I can get a payout. And the plan is to take out half of each account. So you guys can do the math on that. And this is just from this week. So yeah, hopefully I can get this payout by the end of the week, but I'm not going to force it. If I don't get it by the end of this week, I'll just get it next week. It's perfectly fine by me. And I also passed another account with My Funded Futures, a 150k account. So I have that now as well. I'll be trading that. That's what you saw in the screenshots. Tradeovate. You can't link TopStepX on Tradeovate, so that's what I was using. I was using the My Funded Futures account on TradingView, but I was also trading the TopStepX accounts. I copy trade all my trades, and I also have the My Funded Forex account, the 100k that I did pass, and that is a little bit above break even. I had some losing trades yesterday. Not yesterday. Monday. Yeah, today's Wednesday. Yeah, Monday. I had some losing trades on Monday, and then yesterday and today I got those back. So it's a little bit above break even. It's like 0.5% in profit. So that one is a lot easier to get a payout. With their rule change, you just need you can get a payout whenever. It's just that your best winning day has to be equal to or less than 50%. So if you make 2k in a day, then you have to have at least 4k to get a withdrawal, but you can withdraw whenever you want. So that's the good side of things. But that's pretty much it I have for today. It's a good lesson on price, of how to time it and how to find your draw. I think I did a pretty good job explaining it. If you didn't really understand anything, you can let me know in the comments. I'll try and explain it better. But I don't think I have really anything else to cover. I'd say the main important lesson that you should take away from today's video is your focus on time, because that is always the most important factor when reading price. It's always time, the x-axis, before price, the y-axis. So it doesn't matter where price is at. What matters is what time of the day it is. And yeah, I don't really have anything else to cover. I don't know when I'll make my next video, but there you guys go. Ignore the dirtiness in the back. But alright, I'm ending here. So yeah, if you guys learned anything, leave a like, or if you're new, subscribe. And if there's something you didn't understand or something I didn't explain well enough, please let me know in the comments so I can explain it to you better. And that's it for today. Be safe, follow your rules, and don't over leverage. Don't be greedy. Alright, I'll see you guys when I see you.